Welcome back to another video. It is September 28th, 2021. On this Tuesday here, we are looking at the markets. They are closed. It is past 5 p.m. The markets are closed. Remember, this is not financial advice. I'm not a financial advisor. Make sure you watch to the very end because I'm going to go over what I think is a very unique opportunity that has very good long-term potential to change people's financial life, basically. So as you can see, the market was down huge today. S&P 500 down over 2%. NASDAQ down over 2.8%. The Dow Jones down over 500 points. Russell 2000 got smacked. Crude oil still well above $70 a barrel, but that was down as well. Gold and silver were sold off. Although the mining stocks, especially the senior ones, kind of rallied into the evening, closing in the green actually. AMC and GME both substantially in the red. I didn't buy the dip per se, but I'm just a little nervous about more further downside risk. However, I do think that there are buyers on the sideline that I don't know. It's so hard for me to imagine AMC breaking below 30. And I mean, GME was down 5% today, down $10 per share. That's a huge sell-off. Let me pull up the portfolio and show you guys my positions real quick. As you can see, I'm down almost $1,900 on the day on AMC, and down $730 on GME on the day. On the year, I'm still up $31,000 on AMC and up just under $10,000 on GME. So GME, I still have my short put. I went over this in my previous video. I'm in the money, so I'm pretty much if GME is below 190 a share by this Friday, I will be assigned 100 shares with a 190 strike price while collecting $800 in premium. So my break even is $182 per share. Anything below 182 is going to be in the red for me. I'm going to be down on the trade if GME is under 182 per share. So currently I'm under 182 as GME is 178 per share. So I'm down roughly $440 on GME on this new position. But I'm going to hold till expiration and get assigned the shares. AMC, I got my 600 shares down $1,500 on the day. Got my short puts down $429 since opening, and it has a $38 strike price. So if AMC is below $38 per share by this Friday, I will be assigned another 400 shares of AMC at $38 per share, bringing down my cost basis. So as you can see, I have 600 shares at a $39.56 trade price. Can't speak English tonight. And then I have my covered calls. These most likely will expire worthless. This was a profitable trade and just puts more money in my pocket. So this was a covered call with a $44 strike price. As long as AMC is below $44 per share, it'll expire worthless, and I'll keep all the premium. And it looks like that's going to happen. But now, quickly, I want to just mention what I think is an undervalued, really unique opportunity, and that is Alibaba stock. This is a Chinese tech giant, and it has sold off like absolute crazy this year. It's down over 50% from its peak. And I have two call options. One is a LEAP. This is a long-term equity anticipation security. And that is just basically a fancy way of saying a long-term call option. This is out of the money. It has a 230 strike price with a January 24th expiration. Just me being really bullish on it just made me want to buy a LEAP on it. So that has a couple years and some change till expiration. But I'm not going to talk about that for now. I do have this one that expires pretty soon, November 19th, 2021, with a $145 strike. This is in the money. I do plan on exercising this and taking delivery of 100 shares of Alibaba at $145 per share. Currently, I don't have enough buying power to do that. My CCJ short put is taking up a lot of my buying power, or most of my margin capabilities. This is a really leveraged short put, but this will expire worthless if CCJ stays above $19.50 by this Friday. I may get out of it depending on what happens with uranium and what happens tomorrow, Wednesday. I'm not sure if the market's going to sell off even further or if we'll have sort of a flat recovery day. But it would be nice to see CCJ or the market in general kind of stand pat and hold itself. You know, nobody wants to see the market just dip down below unless you're sitting on the sidelines with a bunch of cash and ready to deploy it. But that's it for now. I hope you guys enjoyed this video. Make sure you like, subscribe, leave a comment, And take a look at Alibaba. I think it's a very undervalued stock. Most stocks, tech companies, look, this has a PE ratio of 18. You know, look at Nvidia or Microsoft or Google, all these other tech companies that have, you know, these crazy high-flying PE ratios. You know, I think Bubba is being discounted because of that international regulatory government risk, the geopolitical risk. China is so unpredictable in its regulatory standards, and it's just, you know, being discounted. That's why it's so cheap. And I'm bullish on it. I'm bullish on the company. I'm bullish on China. They're going to be the biggest economy in the next, by 2030, I believe it is, or 2028, something like that. So I plan on exercising my option and holding Bubba for the long term. That is not financial advice, but this is my opinion. And that's it for now, guys. Made this a little bit longer than I wanted to, but I hope you enjoyed this video. Thank you. Bye.